Hey, good morning. Let's go over today's trade plan. So in the overnight session, we've seen that sellers have been more active from the all-time high of 78.25, and now we've gotten this pullback down to the 69.5 to 71.5 pre-market support. Now, bigger picture, we know that the market is in an uptrend, but short term, with no economic releases due today, there isn't really any catalyst in the market to drive price big one way or the other, right? So today could just end up being a relatively balanced session where any pushes down into support end up attracting buyers on first test, and any pushes up into resistance actually attract sellers, and the market doesn't really make a lot of headway up or down. Right now, with the all-time high at 78.25 and not really a whole lot of upside, or at least limited upside, I think it makes sense to be careful, even on the long side. We know that bigger picture, we're still in an uptrend, but short term, the market could be getting a bit tired here, and we have been slowly just heading higher. And one thing I mentioned in Thursday's recap video was that the market could be due for a pullback. So in this market where the opportunities are not really as good, it makes sense to be a little bit more selective, focus on the higher quality setups, because there are really two kinds of setups that are working in this market. One is the aggressive long setup where the market doesn't really even pull back much. It looks a bit scary in real time, and it takes some time for that setup to work. But if you take it at the aggressive spot, because of the overall uptrend, the market ends up going a bit higher and gives you a profit. The other way is to be conservative, skip the aggressive spots, wait for a deeper pullback into some better support zones, and then look for a long setup. So the aggressive spot today is the pre-market support zone 69.5 to 71.5, and the more conservative trade location is down near 65 to 67, or potentially even the 67.5 naked VPOC, and we also have this gap at 67.75. So this spot up here, 69.5 to 71.5, is really the aggressive spot. It's the retest of the breakout from Thursday, and if this market is still very bullish, then this is the spot where buyers can enter. So that's the spot where the aggressive buyers can step in and push the market back up towards 74.5 and the 76.5 to 78.5 initial resistance zone. But if the overnight session weakness continues into the open, then we do have this gap at 67.75, naked VPOC 67.5, and then the initial support zone at 65 to 67, and some continuation lower could quite easily take ES down to these levels, and then the buyers step in. So right now, given that the opportunities are not really as good, like I said, I think it makes sense to be selective, and the mindset to trade this kind of market is that you have to be willing to miss the trade, right? You have to be willing to skip a trade that's not offering you really good reward to risk, right? So if your stop is 2 points, unless your target is 4 to 6 points, it's not really worthwhile to take that trade, right? And you can use the risk reward as the filter to tell you where to get in. So as an example, if you're getting in at 71.5 and you're using a 2-point stop, well, if you're targeting and you plan on holding that trade to at least 75.5, then it makes sense. But if the market's looking quite weak heading into it, the internals are bearish, tick is holding below zero, and there's not really any sign of aggressive buyers stepping into this market, then you're probably better off letting it go and waiting for a deeper pullback. And then the 65 to 67 is really a key spot down here. You can see that's where we're balanced last week before the upside break. So important zone over here, and if we break below this zone, then there's really not much support until 58 to 61. This area is pretty much a vacuum. So if we break 65, then 58 to 61 would be in play. But the idea is that because there isn't any major economic report due today, that we're not going to get a big move lower either, right? So if we get a move down to 65, 67, then we can just balance within this range. start going back up to 74.5. And off the open, keep an eye on the 74.5, because if we continue to hold below it, then that could lead to a move to 65, 67. Whereas if we break through 74.5, then it would open the door for a move to potentially a new all-time high. It will probably be a marginal high. At this point, again, with no real catalyst in the market, I'm not expecting it to rally or really make any significant highs. But it can certainly test 76.5 to 78.5, maybe even make a little marginal high and then start balancing. So right now, the opportunities are not really as good, and I think it makes sense to be in capital protection mode. Just be a bit more cautious, be a bit more careful, and not really press, right? Be patient, let the market get to a good price. Be very aware of trade location, what price you're getting in at. Be even more aware of the potential reward to risk in the trade, and just be willing to skip trades that are not really offering the ideal reward to risk. And that way you're pretty much saving your capital for when the market gets a little bit more volatile. And if the volatility picks up, even intraday, then we can switch our mindset and be a little bit more active. But if the market stays kind of slow and the volume remains light and the internals are kind of mediocre, not really going big one way or the other, then it makes sense to be cautious and careful and perhaps only limit yourself to 1 or 2 trades on the day time frame. So right now, that's really the way this context is set up, in this market that's slowly printing new highs. The overall bias we know is bullish, but on the day time frame, we could still bounce in a range, which means short term we can still head lower and then put in a slight reversal and go back up. So the short term bias is very neutral, bigger picture bias is bullish. That's the backdrop. That's the way the market's shaping up. Let's see how well the buyers are able to hold it up this morning, and then take it from there.